MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/MishTalk. Welcome back to the show, Mike.
Pleasure to be back on.
Housing sales in the U.S. have taken a dramatic drop. What's behind that?
Well, people can't afford them. That's essentially the bottom line. They're already expensive. Real wages have actually declined year over year in January. By real, that's inflation-adjusted wages. Pending home sales took a unexpected dive of to the lowest level in 3.5 years, but I see nothing that was unexpected about it at all. Mortgage rates are rising, affordability is going down, and we have lots of credit card debt and student debt that are slowing household formation. So I don't see the mystery in all of this, Jim.
Well, when you and I started off, $100,000 would have been what we would have put down on our house, or it could have been the complete mortgage. Now kids graduate from college with a $100,000 student loan bill. How can they go out and start their own businesses or buy their own homes? Well,
I mean, some of them can, some of them do. Not every millennial is a basket case. But I was looking at credit card debt today. 43% of people carry a balance. Amazing. Write-offs and charge-offs, 3-month delinquencies rose 11%, 11.6%, I think, in the fourth quarter, according to a Financial Times article today. So, I'm just looking at all of these things, and I just note a hugely deflationary backdrop. My post of the day is called "Inflation is in the Rearview Mirror." Everyone's expecting this huge inflation jump, Jim. It's crazy. We had inflation. We had inflation in junk bonds. We had inflation in the stock market. We had inflation in home prices. We had inflation in asset prices in general. And people are looking at this thing and saying, "Oh, the job market's pretty good." So, eventually the Phillips curve, which has been disproved, is going to cause wages to rise. And the Phillips curve is this crazy idea that when unemployment sinks, inflation rises. And actually, if you take a look at the actual charts, it's a 50-50 proposition, flip a coin. In other words, there is no Phillips curve. But that's what people believe. People think that the Trump tax cuts are going to spur investment and the economy is about ready to take off. I'm thinking that they're looking ahead when they need to be looking in the rearview mirror. Inflation, we already had it. Now, looking ahead, I see an auto market that's weakening, a home supply, a home market that's weakening. Consumer credits consumers are in no shape to continue their credit card binge. I think we're on the verge of another round of debt deflation with asset prices falling.
We'll have more with Mike Shedlock right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Mish Shedlock. Mish, is it really true that U.S. workers had a 1 cent pay raise in reality?
Well, they did. That was in real terms. That was accounting for the rise in consumer prices, which don't factor in housing prices. So if you factor in housing prices, they had a decline. I don't think it properly accounts for rises in the price of Obamacare either. On the theory that in Medicare it's paid for, and consumers, a lot of people actually get it through company insurance plans, so the consumer doesn't have to pay that. So let's not count that either. So unfortunately, those who do have to pay for their own health insurance have gotten clobbered. Certainly, anyone wanting to go to school anyone in school is concerned about rising cost of education. So the whole inflation setup, inflation is underreported as it is, and the Fed wants more of it. So, yes, none of this supports consumption. It's no wonder the saving rate is falling. With real wages going down, the only way the consumer spending can go up is if more people go into more debt. And that continues until it doesn't, Jim, until it doesn't.
We'll have more with Mish Shedlock right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mish Shedlock. Mish, the U.S. GDP went down, and yet they still expect to hike interest rates another 3 or 4 times this year. Is that flying in the face of what's actually happening with the economy?
Well, GDP was essentially flat. We're talking about the second revised estimate. It fell from 2.6% to 2.5% in the fourth quarter. Statistically, that's a meaningless change. It might be revised either higher or lower in the next estimate that comes. Let's assume it's right. The Econoday was crowing about that, and because consumer spending was revised up, okay, to 3.3% or something. They called it strength. I mean, Econoday was literally crowing over this. This is another one of these rear view thinking types of setups. Jim, a lot of that increase in consumer spending, we're seeing now an 11% rise in defaults. So people are buying stuff that they can't afford. But what are they buying, and what were they buying? Well, a lot of that increase was related to the hurricanes. People had to replace cars. They had to repair damaged homes. They had to, fix, property. That was a lot of the rise in consumer spending. So, this is, all in the broken window fallacy here, where economists claim that hurricanes and the like, increase GDP. Well, they don't. It gave a temporary boost, one-time boost to the fourth quarter, but that's at the expense of a even bigger payback in quarters to follow. And I think we're seeing that now in the latest GDP estimate from GDP Now. On February 1st, it was estimating 5.4% first quarter GDP. I looked at that and I said, I'll take the way under. If this was an over-underline at 5.4%, I would have taken the under at 4 or even 3%. Guess what? It's sunk all the way to the twos, and more importantly, their bottom line spending estimate from GDP Now is 1.6%. That's real consumer spending here. So, or real purchases, not just consumers, as opposed to increases in inventory. So that's what we're talking about here. A 1.6% growth, and that's just so far. If we get one more bad spending report or another bad housing report, those numbers are going to fall. And we already have an advance indication today that, based on home purchase expectations of another collapse in existing home sales. Guess what, Jim? When you buy a new home, you put in new carpet, you paint the walls, you get new appliances, you possibly put in new cabinets. All of that is going to have a huge impact on actual consumer spending. So I think these GDP estimates are poised to come down further.
A survey found U.S. consumers are their most optimistic since the .com crash. Does that tell you things are about to blow up?
Well, it tells you can't believe these surveys. What are they really measuring here? To an extent, I think they're coincident with the stock market. The economists claim that when consumers are confident, they're going to go out and spend. Okay, so why didn't they? Why did retail sales go down in January? That's just 1 month, but consumer confidence keeps going higher and higher and higher, and it's been going higher for years, actually. And so if that caused consumers to buy, why hasn't retail spending been going up for years? It hasn't. So this whole notion of consumer confidence translating into spending is just more economic hogwash.
Mike, thank you so much for chatting with us.
A pleasure to be on the show, Jim.
My guest has been Mike Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/MishTalk. If you have any questions for the show, you can email us at info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.